All right, traders, great to be with you today. We're going to be trading FOMC.
9 times a year.
9 times a year. 9 lucky days a year we get to trade together, or more.
Yeah, it's, anytime I can trade with you, Shawn, I jump at the chance.
Same, I feel the same, Todd. Well, we got about, 30 minutes before the FOMC announcement comes out. Looks like, man, look at that euro trend. That trend on the euro is just solid up for the last couple of days. I don't know if there's some news that's been leaked out or if everyone's just anticipating that the Fed might actually lower rates.
Well, if you believe Donald, he wants them to drop it by a point. And,
a whole point.
That would be a surprise, I think.
It would be a big surprise, I think. I was thinking about it the other night, and I was like, is this really a good thing? Like, is this really a reason for us to rally on the stock market that they're lowering rates?
Yeah, you wouldn't think normally that would be the case, but
I mean, yeah, easy money policy, but in reality, it's like this market is or the economy is in so much trouble that they had to do a 90 or 180-degree turn on their Fed policy, right?
Yep.
180-degree turn on the Fed policy and lower rates. Now they're talking lowering rates. That's, I don't know, that just doesn't seem like a reason to be all bullish in the stock market.
Yeah, it'll be interesting to see what they say because, I mean, even though Donald Trump probably shouldn't have an impact on it, I think that it'll be interesting to see if they put any bias in towards what he has been tweeting.
What he's been tweeting. Well, market is just going sideways right now. Honestly, there are some announcements, Todd, that I have a really good feel for, and then others I just don't have any good feel how the reaction's going to be. I don't have a good feel on this one. Do you?
I don't. I mean, the FOMC's interesting because if it's pretty solid, I mean, if you pretty much know what's going to happen, then you can kind of expect what's going on. Right now, I think there's so much uncertainty in terms of what the Fed's even thinking that it'll be interesting to see. And like we were talking about earlier, we do have the press conference afterwards, so a lot of this may come out in the questions that they're getting. But probably more important than anything is that, we talk a lot about, what can we do to trade something like this? And we'll put some trades in here looking for some quick movements and whatnot, or at least I will. But in the end, it's also good if we just don't trade it. I mean, wouldn't make for good TV here, but a strategy would be that we step aside and then we wait for it to come out, and then we start to do things. So if you're not comfortable or you don't know how to trade during the FOMC, waiting to see kind of what happens is oftentimes a good step as you get familiar with trading during these times.
Yeah, and clearly we're moving into that low volatility period. So for the next 20 minutes, I don't expect much movement. We might get a little pop here and there, a little rally out of the euro at least, here and there. But once the announcement comes out, hopefully there's a bit of volatility, and that's when I'll start to jump into the market and try and capture some of that volatility. But it's been the last 2 times we've traded, the volatility has been great right out of the gate, and then it just goes back to nothing 5 minutes after the announcement, waiting for that press conference.
Yeah.
So we'll see if that happens again today.
Yeah, and I think that if you guys are out there getting ready to trade this, make sure that you're using small position sizes as you get into this, and really there's going to be those that trade it beforehand, and then those, like you said, trade it after. We kind of see what happens with the movement. For me, I'm going to put just my buy stops and sell stops and see if we can't get a pop one way, and then hopefully have a little bit of movement initially there.
Yeah. Another thing is I think when we're broadcasting this, we're 10 seconds before you guys out there, before you get to hear what we're doing. So you're automatically behind the 8 ball when we're placing these trades. So if you're following what we're doing, you know, you're probably 10 seconds behind before you hear that we're selling or buying or something like that. So be really careful, you know, if you're out there trading on your own. What's that disclaimer Nate always says, you know?
Yeah.
We're not doing this to give buy and sell signals. We're just doing it to demonstrate, you know, how we might interact with the market. So,
But if we could really trade like that, that would be awesome.
wouldn't it?
Have a
10-second
head
latency? Oh, that'd be awesome. Or if you saw the market 10 seconds after, yeah, how does that work?
Yeah, I don't know. We'd have to figure that out.
Seems like a quantum mechanics problem.
Yes, the time machine issue.
Time machine. Well, I think we're going to be sitting here for a minute because there is nothing happening right now.
So I can put my trades on here and just kind of show them what I do if you want to switch it over to my screen. Good here. Okay, so right now I've got 6 pairs up here. And again, you know, I usually don't do ones that are going to be too correlated. The euro, the pound, dollar pairs here in the top left and the top middle are going to be probably pretty correlated in how they move. Inverse to that will be the U.S. Japanese yen, which is the top right. And I've got the CAD, U.S. CAD on the bottom left, the Euro Aussie dollar in the bottom middle, and then the pound yen in the bottom right. So the kind of the philosophy behind taking these types of trades is that the market is going to have a big reaction one way or the other. And you know, I've got on here a 50 pip target and a 50 pip stop. Probably, I mean, we could get that big of a move, but generally we're not going to see quite that big of a move. I'm just putting those in there because in case it really does move, then I'll look at being able to capture those pretty quick. Generally, as soon as it gets filled, I'm going to cancel the other side. So for example here, and I'll blow this up so we can see it on the one, but this is a 1-minute chart of the Euro US dollar. If you right click on the chart above the price, then I can put my buy stop in here. And you can see that I've got my line here and my take profit, and if I go below it, I can put my sell stop. And then what will happen is as we get closer to the actual announcement here in about 20 minutes or so, we're going to adjust these in tighter. And usually I'll go about 10 pips above and 10 pips below. I might tighten that a little bit more if it looks like it's really flat. One thing that we have to be careful about is that the spreads will tend to get wider. And so if you're too close or too tight on the your buy stop and your sell stop, you can get filled actually on both sides of these pretty easy if the spread widens. But what I'll do is I'll go through and I'll just do this on each one of these. So I do my buy stop, sell stop, and I'll just get prepped for this. Buy stop, sell stop. Now, if there's nothing happens, and we do this in the Daily Forex Fanatics in the morning when news comes out, and a lot of the news during that time, you know, doesn't move a lot, and so we end up canceling these. But every once in a while, we'll get a pretty good move. And so once one gets filled, then I'll cancel the other side of it. So I'll just have to watch that as the announcement comes in. So buy stop, sell stop. So now I'm pretty much set in terms of what's going to happen here. And then I'm just going to be managing these by watching the price action as it approaches the time. And you know, like we're at 18 minutes here. And so I'm going to just zoom in on these. And really, if I wasn't sitting here or standing here, I would be just quietly watching this, not doing a whole bunch other than that.
So I think I'll trade the euro exclusively and just try and catch, you know, volatility, build into trades real quick, and catch the movement as it's going up and down. But before we get into that, I kind of want to look at the daily chart on the euro. And, the daily chart, I've got a couple of trend lines drawn on here. We've been in these patterns where the market where the euro's rallied, then the dollar's rallied, euros rallied, dollars rallied, euro rally, dollar rally, and we're right in the middle of another euro rally. And so, and then another interesting development on these charts right now is this period of really thin trading right in here. So we've got a little bit of a gap. It's not a true gap, but it's more just because of the liquidity provider that I'm looking at. But you have some really thin trading right in here. And so there will be a tendency for the market to kind of come back and test those levels at some point. So, a couple of scenarios that I'll be looking at. I'll be looking at a rally up and then a pullback. These are longer term trends, over the course of the next week or so. But if the Fed comes out with dovish policy today, then I'll look at that euro rallying, maybe up into this trend line up here. And then I'll be looking for a big reversal to happen and come back down and test these before there's a really good solid break up to these levels. So that's one scenario that I'll be looking at over the next couple of days. Another scenario is obviously same thing, dovish policy today, moves it up, hits that resistance, drops back down. I could see it coming all the way back down. Depending on, what the longer term outlook is at the Fed. So we could see that. But either of those scenarios, or obviously, just a quick shoot down is obvious, another idea that we could be looking at over the next week or so.
So let me ask you a question that some people may be thinking about. You're really smart because you said it could go up or it could go down.
Oh, yeah, right? Yeah. And that way I cover my bases.
That's right. So you're going to be right one way or the other. So as you're looking at this scenario here, we know and can understand, that the market is going to go up or down, maybe based off of what they say. But what is it that you see on the chart that actually says, okay, now this is actually doing what I expected it to do?
Well, there's two layers that I'm really interested in right now, and that's this layer up here when we hit this trend line, this layer right here when we test this gap area, and then of course the area clear down here. So what I'm looking at is in between these layers, these rectangles that I've drawn on here, in between these layers, I expect the market to have relatively unimpeded progress, right? So to move up to that trend line resistance, not a problem for the market. Once it gets up there, that's where I'm going to be looking for one of my scenarios to start to play out. If it rallies back down, relatively unimpeded all the way to the lower end of this rectangle, right? Then I'm looking for it to break down at these levels. So this is how, I don't think any individual knows exactly what the future has in store for the market. But what I do is I will lay out these scenarios, right? And you're right, it's like it could do this, it could do that, and I've covered both my bases because it could go up or it could go down. So it seems a little, people might be thinking, oh, that's that's ridiculous, yeah. Right?
And I think that the point that you're making here, I think that's important for everybody to know is that, like you said, you lay out that scenario, but you're not buying or selling based off of what you think is going to happen. You're waiting until you actually see those scenarios play out.
Yeah, those scenarios. Once the reversal bars form, the patterns form on the smaller time frame chart, then I'm looking to use that for my bias in the next several days worth of trading. So, any rate, that's kind of what I'm looking at over the longer term. On the shorter term, it's all about capturing momentum. Yeah. Whatever momentum we've got starting to develop in the market, we'll capture that, or maybe even fade it. I am a contrarian, I think. So I do like to fade, some market movements and stuff like that. So we'll just kind of each scenario, brings a different set of a different scenario. Each scenario brings a different set of different read on the market, and so however I'm reading it at the moment, it will determine how I play, whether the short side or the long side on this. But 12 minutes.
12 minutes.
12 minutes. It's
Yeah,
warm in here.
It is warm.
They wanted to trade outside today, but it's like 38 degrees outside. That would be terrible.
We could have worn our coats.
I would have had ice in my knuckles
Instead of in your veins.
instead of my veins. Icy knuckles. Icy knuckles are bad for trading.
Somebody wants to see your charts again, Todd. Is that okay?
Yeah.
Go over your charts.
So what I'm doing now is I'm just kind of adjusting these buy stops and the sell stops. So, for example, on this U.S. Japanese yen, this initially is up here pretty close. So I'm just pulling it down right now. In about 5 minutes till the announcement, I'll start to tighten these up pretty good. Right now, it's just a matter of adjusting it and making sure that we don't get hit or filled before the announcement comes out, because this whole setup is based off of the idea that there's going to be an announcement, and that announcement's going to have an impact where we really get a big move. And if that doesn't happen, then I'm going to get out of these. And one of the mistakes that I know that I've made in the past is I'll set up a trade based off of a premise that something is going to happen, like a big news event, and then I don't close out of that trade, or I let it get filled, and now I'm in a position where I shouldn't be, because it's goes completely against why I initially entered into that position. But I'm just doing buy stop, sell stop, just a little bit above and a little bit below the current price, and I'll probably get that to about 5 to 10 pips in between it, right before the announcement comes out. I do have a 50 pips target, a 50 pip stop. If I get this popping up 5 or 10 pips, usually I'm going to be getting out of it. If it's really a big move, it'll move 30 to 50 pips almost immediately because of that announcement.
What do you all think? Are we raising rates, lowering rates, or are we keeping them the same? Let's do a quick poll. Can we do a poll? Just chat. Say raise, lower, keep the same.
Josh says maybe not get a big move at all. Most likely stay on pause. No reason to cut the rates. Everybody is saying raise, raise, raise.
Yeah.
Say same. Lower. A lot of sames.
A lot of sames. That's kind of the camp I'm in. I don't think Powell's already got a lot of backlash, for pandering to Trump, I think.
He says it best when he says he doesn't care, he just wants volatility.
Yeah, I like that. That's my favorite response. But here again, I think we may have one of those less than volatile experiences today.
Yeah, and a lot of times when you get news like this, you'll see it spike up and then it'll reverse back down. And if you like to trade counter trend to that, a lot of times you get those big spikes that are really primed to be able to kind of catch some moves down.
So I did take just a quick scalp, a counter trend off this little spike right here. Entered a couple of shorts up at the top, pulled out of those, with some small profit on that. Again, back down to the low end of the range here. I could go into some longs. In fact, I may just throw a couple on just to see if we can get something. So I'll throw a couple longs, highly speculative. No, I don't know if these are going to play out or good or not, but this is just my counter trend.
Josh says couldn't resist.
I couldn't. Yeah, Josh knows me. Josh knows me all too well. can't resist. Can't resist an overextended price cycle. So we'll put these little take profits, line them all up right about there, and see if we get a little pop out of that, or out of that market. There's a little jump, not quite enough to make anything. A little more. We'll close out of a couple of these. Leave the last 3 on for a full price target.
Yeah, and so
There we go.
we're at this about 5-minute mark here, and so just be careful, guys, if you're trading this, that you pay attention to what's happening with the spreads.
That's a good point. We're still at 0.2 on the euro, so
Yeah,
that's
so
good. All right, 6 minutes away, almost five and some change here. It's created a nice set of pivots. So we got a pivot up here, pivot down here. Comments from the group?
Somebody asked Shawn, if you set your mind in the long for the Euro USD, how much heat will you take percentage-wise if the market goes against you, thinking and knowing you're very aggressive?
How much heat would I take? You know, so a couple of things. One thing that you'll notice, I like to come in with a little bit of cushion when I'm trading, especially a news event like this. And so, you know, I built up a really nice cushion this morning. Obviously, we had some good movement and was able to make a little bit of money. But I'll, you know, on a big announcement like this, it doesn't, you know, if I get into a negative where my daily return turns negative, then I'll start to like think maybe I ought to pack it up a little bit, but you know, 1-2% on a trading session like that this is nothing. So for me anyway, I don't mind taking a 1 to 2% risk on a trade or on a trading session like this. So. Whatever it is for you, like that's for me, you know, but I think the rule maybe that you ought to think about is that how much effort will it take to recoup a loss, right? So if I get into this trading session and I do take a loss and it's 1-2%, how long will it take me to recoup that? And, you know, with my trading, the way I like to trade, you know, a day or two, I could easily recoup a 1 to 2% loss in a day or two. That's acceptable to me. You know, I don't mind taking the risk and trading, you know, if at the worst case scenario, it's going to take me a day or two to recover. If it's going to take me a week, now we've got a different story. You know, that's a whole different scenario, because I don't want to waste an entire week's worth of income to recoup a loss.
Yeah, and I think that's important for a lot of people. You know, when we talk to them about how much risk, or they ask, you know, how much should I be risking in these trades? Well, you know, it's so personal, because you know, you're going to be different than me. I'm going to be different than you, and I think that the key is, you know, for me, if I get into too much risk, then I start to trade scared.
Yeah.
And trading scared for anybody is not a good thing. And so I'm a lot more conservative than maybe some people, and some people are going to be a lot more aggressive, and it just depends on how comfortable they are with that.
Totally agree. I'm putting them on a couple of longs going into the event here, just prior to the news event happening. And I'm going to keep it real small, half a lot here.
Getting some movement that my Euro Aussie.
Euro Aussies?
My Euro Aussie moved.
The euro's weakening, huh, against the Aussie.
Mm-hmm.
All right, we are getting close, close, close. Spread is starting to widen. We were at 0.2 earlier. We're at now 0.3. And I'm into one lot, 0.9.
Okay, 1 minute.
Now we're starting to see the euro weaken across the dollar against the dollar as well. So there could be a little, there could be a gap lower on the euro.
"30 seconds.
30 seconds.
John says, is this fun or what?
I love this. Don't you love this?
I do love this.
I love it.
As long as it moves. If it doesn't move, that's like, ah.
Yeah, then you're like, oh, this anticipation, and then nothing. All right, just closed out a half of those
Okay,
positions.
right there.
There we go. There's the rally. Closed out of all. Let's see. We'll watch this. Now I'm going to watch this rally for a bit, and then I'm going to start to peel off a little, or take a couple of trades on the short side. I'm going to fade this just ever so slightly. There we go. Picked up all those. Now the question is are we going to get a break lower than the lower pivot down here? So that's the big question. There we go, lower. And quite a bit lower. So now I think I'm going to get ready here and fade the outer edge in just a minute. Try that. Oh, didn't get any trades in. It moved too fast.
Whew.
Big old spinning bar right now. Huge wick on top, huge wick on bottom. There's the rally side. I'm going to put some shorts on right here. Put a couple more shorts on. And we're taking some heat on that trade now.
It's trying to decide where it wants to go.
Taking that outside edge over and over and over again. Now, up at the highs, let's see if it breaks. I'm going to close out of, pull these profit targets up. And a new high on the euro. And it's holding in the upper range. Now that's dangerous for short positions right now because it'll give it some strength. So anytime it's holding on the upper ends of these ranges like this, it's be careful, right? Because it's gonna want to gather a little bit of momentum. Using the profit to peel off the other end. Highly doubt that we're going to get back down to these ranges down in the lows here, so I'll be pulling these up, taking some losses on those. And let's see if we can get at least a move down to the highs prior to the event. So move back down to the highs prior to the event right here. Take that to peel off a couple of losses. And we're done with that trade. If I get a rally up one more time, I'm going to start to trade the outer edge of this. We're not getting into a real strong trending market yet. So I'll fade the outer edge. And let's see if we get again, it's holding in that upper range again, so a pullback and then a test of the high. Everybody saw that, the rally up, pullback, test of the high prior to the event, and now we're holding in the upper ranges. So if we get a strong bar close higher than these highs, then we're going to see another run in this euro. So be really careful about your trading. Don't get too upside down right here.
By the way, no change.
No change?
No change.
Yeah, I thought that might be the case. And still holding on that 1 minute chart. It's going to have some, there you go. Okay, so now this bar's got that outside range. So now I'm going to put another layer in, another short layer in here. And let's see if we just get enough volatility to pull back. Maybe a little bit of a divergence set up here. It's got to cross below the low of the previous bar to get that divergence signal. Nope, not quite there. Another push higher. And another impulse to the upside. We're just going to fade again. And I'm going to pull these up to the low of the previous candle. So we're going to mitigate, try and use any kind of volatility we can to mitigate the loss on these trades, meanwhile picking up a little bit of gain on the most recent trades. The thing I'm looking at right now is I just don't want this to get into a trending market. So as long as this volatility stays like it has, I'll keep doing what I'm doing. But if it gets into a good trending, you know, marching higher, candle after candle after candle after candle, then I'm going to abandon this approach and look at a different way to trade. So it came down and hit the low of the apex.
So the other thing that we have to take into consideration here, right, is that, you know, we've got this 30-minute time between now and the statement. So, and so picking a trend, this may be a good time where it won't pick a trend because it's still going to be waiting to see what happens.
There's still a lot of uncertainty, yeah. And you know, the rates were unchanged, but what is the Fed thinking right now? This is fun. I really enjoy just getting in and trading like this. As long as there's volatility, life is good. When there's no volatility, that's when life gets rough. I know I tell that to, you know, people who aren't traders. They're like, what are you talking about? You like volatility? Yes, I love it. Just a little bit more. It's really slowed down, right? The price development has really slowed down significantly. We've got a 1, 2, 3 bar or 3 tail low. I don't know if you can see that. I'll zoom in the best I can, but we got a 3 tail low here. 1, 2, 3 tail low. If we break that, there will be a tendency the market will come down at least and try and test that level again. So if it breaks up before it comes down and tests that, then I'm going to have to move all of these up, because we'll have another, that support will be too strong for it to hit those targets on the low side. If it rallies back down, if we get another push lower, then there's a good chance we could break that 3-tail low. So we'll see how that forms. Regardless, I like where all the rest of these are. I like this layer of profit targets right in here. Just move those up slightly to compensate for spread. Now we'll see. We're getting pushing on that upper range. There could be a break to the upside here, easily. Down on the low of that little trend. A break lower will push us down to the low, the 3-tail low. A reversal here will have the tendency to give us another leg higher. So it looks like it's starting to reverse a little bit here.
So let me ask
There
you
we
a question.
go. There we go. That's what I was looking at right there. Came down to the 3-tail low. Let's see if it can break that. Okay, so it's finding support here. This is a good place to lighten up our position. There's the break of the 3-tail low, and there's all of our targets right there. -1, -3. There we go. Done. What was your question?
It's so easy. It's like
so easy.
you're whispering to the market and it's going down. Go down. So you talk about the tails and those areas that you look for the price to move to and bounce off of and all that. Will you still look at that during the press conference? Like if they're talking, do you find that that's less consistent because you don't know what they're saying and people are reacting differently because of what the Fed is saying?
Yeah, obviously, I think during the press conference itself, whatever Powell says, if he throws out hey, we're lowering rates next, if he throws that out, none of this is going to matter, right? We're going to see the euro rally just hard, right? But if he doesn't rock the boat too much, then these layers will still hold pretty well. Obviously, in between sessions, the layers will hold pretty well in between sessions. So, but that's kind of the way. That's why these news events are so risky, right? Is because whenever they say whatever they say, technical analysis is out the window.
Yeah.
So. All right, so we broke the 3-bar low there, came all the way down to the next low right there, and pulled up off of that. Now, my tendency is to say that we're going to have another test of that low, like a better test. So I'm going to put a couple of shorts in. But that's just kind of my. I don't like to see an unbalanced test like this. So, especially when I have a lot of solid body on the support level. So body all on that support level, and a little tiny wick holding it up, I kind of tend to think that it'll come back down and test that low with something more solid, like a body. We'll see right here. There we go, there's the test. right there. Now, does it break? This is one of those areas where I could go long, could go short, but I'll wait and see how price forms around this layer right here. I'm itching to go long.
We got 16 minutes before they start speaking. So
Okay, I'm going long then.
you might as well do it now.
We'll go in 3.3 lot size, so nothing big. I'll pull that profit target down just a hair to compensate for the spread. Questions? Yep.
Brandon just simply asked, did you make a profit from the last 5 minutes?
Did I make a profit in the last 5 minutes? Yep. I can't remember what I started this session out at, but I think it was 220. So I picked up about 0.2% return on the account since the about 2.2% return on the account since the announcement. So I'm not trading exceptionally big right now. Not getting in too deep right now, but profitable.
Somebody asked, do you think it'll test the 1243?
Do I think it will what? Pass the 1243?
Test it.
Or test the 1243? Well, given on the 5-minute chart, given the solid trend that we've seen on that 5-minute chart, there's been a lot of building into this event, right? A lot of position taking prior to that event. So my gut says that it won't. It could test it, but I don't think it's very likely. I think we're going to see a little bit more bullish action on the euro before. And if we go back to the daily chart, the first scenario that I'm looking at, that kind of supports that idea, right? The rally up to hit that trend resistance. So, but who knows? You know, the market will do what it wants to do. It's our job not to tell it what to do, but to respond to what it does, right? And that's how we make our money.
Yeah, and that's hard, you know, for a lot of people to learn. You know, we want to force our will on the market,
Yeah.
and it doesn't seem to work very well.
Well, yeah, that's exactly right. All right, right back up at those where that break was on the trend break. So that should play an interesting right here. This will play have an interesting influence on the market. We'll see if we get that tail forming there. No, had no impact. Up at the highs, I'm going to short the highs real quick here. Now it could break up higher, which is fine. So I'm in one layer right here. I'm going to put a second layer in. Now I want that second layer, I want my profit targets to be above the pivot on the second layer. So right about here is where I want that second layer to start to form, because I want profit targets. So when it comes back down and tests the old highs, that it triggers all my profit targets on this layer. So a little tight, a little tighter than I like it to be right here. I'll pull these up. hitting those targets right there. And I'll just close these out. Break even trades. Now, wait. Now I'm going to wait. I don't have any real significant movement. Nothing really significant telling me to go long or short right now. So I wait.
So while you're waiting, can I show something
You
here?
bet.
I just want to show what will happen a lot of times with this particular strategy here. This is the pound yen, and I had before and you can see where this was put in. So the beginning of these lines here, I plotted these trades. So right here is when I put the buy stop and the sell stop in, and it was filled right here on this red candle. I'll move the line over here so we can see it. So it was on that candle. That was right at the top of the hour when the news came out, and I got filled on both of these positions. So even though this sell stop was about 8 pips below where the price was, it still got filled because that spread widened. And so when I got into this, I couldn't close out of the other side because it happened within 2 seconds of each other, that the buy stop and the sell stop got filled. And so what I ended up doing is taking a little profit off of this one, and then I added some trades as it pulled back. So if you ever get into a situation where you're looking for the buy stop, the sell stop, and you're straddling that price action, waiting for the big move, if it's too close, and a pair like the pound yen has a tendency to have big spreads anyway, or bigger spreads that get even bigger as this news comes out, you could get filled on both sides of these without the price actually looking like, or the candle looking like it's moving down to it. So you just want to be aware that you could get filled on both sides of those when it comes out. And the rest of mine I got out of, I think I picked up 15, 20 pips or something like that. But just a quick move up, get out, and then we've got 9 minutes before we're ready to go for the next round of potential volatility here.
So I've just scalped a couple of real small positions inside this consolidation box. If we get a reversal right in here, we may have a down leg on the market. I'm going to put some shorts on. These aren't the best positioned trades that I've got. I'd prefer the profit targets to be above the inside the box. But I'm going to go ahead and place a couple right in here. So now there for a minute it was looking like it could have broke to the downside. Now it's kind of changed patterns on me. Looks like it could break to the upside now. So if this break is if it's a big bar break, then I might be in a little bit of trouble on this. So we'll watch how this bar, whether it breaks or not. It's holding in the upper range, should break to the upside. One thing I could do is hedge out this position, put some longs in, and then wait and see, or just kind of hold my ground. A tail would be awesome right here. An upper tail, that is. There we go.
Is that the official term?
Upper tail? I don't think so. I'm making up my own words here. I don't know that there's anything official in this.
Upper tail sounds as good as anything.
Upper tail, lower tail.
Downer tail. It'd be upper tail.
A downer tail.
Downer tail.
So you see where I'm saying I would have rather had those profit targets a little bit higher right in here, because it's like this is the support level. So we have to literally break the support level to compensate for the spread. So these need to be just slightly higher to close out of those positions. Clearly the market does not want to move prior to that press conference, right? It's just going to like get into a range. It had its moment. Like it could have easily broken up, like right here would have been like the perfect place for it to break and move higher. It didn't do that, but it came back and tried it again. So it could have easily broke up there, and it didn't. So that's kind of like it tried it twice. So now there's a good chance that it could kind of pull back or just kind of keep moving sideways like it is. Right now is the moment where it should be breaking to the downside, or a good time to look for it to break down.
Yeah. And, the volatility here is nice. And if you look at your 5-minute chart, it looks like a pretty big move. But for, historically, you've traded where it's moved, 100 plus 200 pip move, So even though this looks like a big move, it's really not a huge move for what a FOMC announcement could
be, right.
And lately they don't. It seems like
We haven't had the
done
big
that
move.
type of a movement.
No, in fact, both this and non-farm have been muted responses. Yeah. All right, there was the test of the lows. Let's see if it gets a reversal to test the high of that consolidation box. And put a long in right here. Not breaking yet.
We got 4 minutes until the press conference is starting.
4 minutes. T minus 4.
T minus 4. Did we ever figure out what T was?
What it stood for?
Yeah. Time
minus 4.
Time minus 4.
It's the rocket, right? NASA thing.
Take off. That would work.
Take off in 4 minutes. All right, rallying up to those profit targets right there.
Everybody on YouTube saying take off.
Take off.
Take off.
And man, I want to get into another short. I'm just peeling off little 2-pip trades on both sides of this over and over and over. I started the session out at 2544. I went and looked. I took a screenshot before we started. So I started the session out at 2544. We're at 2872. So we picked up. Someone want to do the math on that? When I'm trading, I don't.
I'm doing it in my head right now.
2875 minus 2544. I guess I can do it. 230-ish, 230 pips-ish.
231. 331.
2875 minus 2544. 330-ish.
Don't want to sell you short.
No, 100 pips. That's a lot.
Yes.
Oh, do I take a short now? He's speaking in 2 minutes. I do it. What the heck? Just put 3 on. Again, see how that's see how that profit target's just outside of the range? I'll pull that up just a bit. Now there's a better chance of it hitting those targets. That's one thing I'm big on, you know, when we're trading, is adjusting those targets so that they're in a high probability spot.
Getting hit, yeah.
Yeah.
Do you ever have the tendency to look back and say, what if? Like, you know, you're getting 2 pips. I mean, with my strategy, I'm looking at 3 pips, and a lot of times I'll talk with people and they'll say, well, it moved 20.
Yeah.
Why don't you could have got 20 pips, but you only took 2.
Right.
So how do you control that urge to feel like you have to get more when your strategy is set up for 2?
I think that's a trading disorder, right? It's not a mental disorder, it's a trading disorder. Yeah, it's something that everybody does, and I think eventually you have to just get rid of that whole tendency to do that. You play your game, right? Look, I've been doing this for so long, I know that I can do what I'm doing over and over and over again. And so building the confidence in what you do, as opposed to looking back and trying to maximize and milk everything you can out of the market. Just, you're not going to do it consistently.
And it's doing what you know, right? Doing what you know.
Doing what you know. And you know something different than I know, and I know something different than you know, and it's just, that's what makes a market, right? You can be right and I'll be right all at the same time.
And we get asked a lot, why don't I do 2 pips and when you do 2 pips?
Or I get asked, why don't I put 3 pips in? So it's just the way it is.
Hey, our friend's on.
And decided to leave our policy interest rate unchanged.
Oh, yeah, unchanged.
One overarching goal: to use our monetary policy tools to sustain the economic expansion with a strong job market and stable prices for the benefit of the American people.
That's actually interesting wordage.
Incoming data since our last meeting in March have been broadly in line with our expectations.
Sustained economic expansion.
Has been a bit stronger than we anticipated, while inflation has been somewhat weaker.
Do you think he writes these, or do you think he's got a speechwriter?
No, definitely a speechwriter.
The committee believes that the current stance of
There's so much analysis being done of every word he
The
says.
committee also believes that solid underlying fundamentals are supporting the economy, including accommodative financial conditions, high employment and job growth, rising wages, and strong consumer and business sentiment. Job gains rebounded in March after a weak reading in February and averaged.
So are we getting much movement?
No movement yet. Pick it up a little bit.
Although first quarter GDP rose more than most forecasters had expected, growth in private consumption and business fixed investments slowed.
What side are you on?
Recent data suggests that these 2 components
This is the
will bounce
federalreserve.gov.
back, supporting our expectation of healthy GDP growth over the rest of the year. The committee is strongly committed to our symmetric 2% inflation objective.
You need one of
For
those
much
yellow
this long
badges.
expansion, inflation ran a bit below our 2% objective, alongside
Okay, I'm going to put a couple longs in
resource
here.
utilization. But last year, with the unemployment rate at or below 4%, inflation moved up. From March through December, core inflation, which excludes volatile food and energy components, was at or very close to 2%. Overall inflation fluctuated from a few tenths above 2% to a few tenths below over this period, with the moves mostly due to changes in energy prices. As expected, overall inflation fell at the start of this year as earlier oil prices.
There we
declines
go. We got some
worked through the
movement
system.
there.
It's because they're not going to be
Overall
raising
inflation for the
interest
12
rates or
months
lowering
ended in
interest
March
rate. I
was
mean,
1.5%. Core inflation
Go on the
unexpectedly fell
outside
as
of
well,
this.
and as of March stood at 1.6% for
Ooh.
the previous 12 months.
There's a break.
We suspect that some
Significant
transitory
break
factors
lower.
may be at work. Thus, our baseline view remains that with a strong job market and continued growth, inflation will return to 2% over time.
I'm going
and
to
that
peel
we will
off
be
some of
symmetric
these.
around our longer-term
Take a
objective.
bit of a hit here.
At the start of the year, a number of cross-currents presented risks to the outlook, including weak global growth, particularly in China and Europe, the possibility of a disruptive Brexit, and uncertainty around unresolved trade negotiations. While concerns remain in all of these areas, it appears that risks have moderated somewhat. Global financial conditions have eased, supported in many places around the world by an accommodative shift in monetary policy and in some cases fiscal policy. Recent data from China and Europe show some improvement, and the prospect of a disorderly Brexit has been pushed off for now. Further, there are reports of progress in the trade talks between the United States and China.
They like what they're hearing.
The committee views these developments, along with the outlook for continued growth, a strong job market, and muted inflation pressures, as consistent with continued patience in assessing further adjustments in monetary policy. Over the past several months, we've made a number of consequential decisions about our balance sheet. In January, we decided to continue implementing monetary policy using our current policy regime, which involves providing an ample supply of reserves. In March, we decided to slow the pace of balance sheet runoff starting this month and to cease runoff entirely in September. These plans support our longer-run dual mandate objectives and also provide clarity about the path of our asset holdings. Today, we had a preliminary discussion about the longer-run maturity composition of the portfolio.
Yeah, that's a good move, isn't it?
Financial crisis, our portfolio was weighted toward shorter-term debt of the federal government. In the wake of the crisis, the Fed bought a large amount of longer-term securities with the aim of lowering longer-term interest rates and thus supporting the recovery. Because of these purchases, our portfolio is now weighted toward longer-term securities. As part of normalization, we will have to decide what maturity structure.
Not sure if this one's going to pull back.
We're going to get the snapback.
The snapback.
This choice raises many complex issues and has possible implications for the stance of policy.
That is a significant move.
Laid the groundwork for more complete analysis.
Yeah, so we're in the 50 pip
drop
here.
Yeah, seriously. And I'm on the opposite wrong end of that right now. So just one little pop higher would be good.
Notice and in a manner that allows for smooth adjustment.
So the question, will it pop back when he's done?
I don't know. I'm in 2 layers. I'm down about a 1% right now, so pull up, just any kind of a pullback.
The change does not reflect any shift in the intended stance of monetary policy. We use the IOER rate to help keep the federal funds rate in our target range. As balance sheet normalization continues, we have expected that the effective federal funds rate would shift up over time relative to the IOER rate. Last year, we twice lowered the IOER rate by 5 basis points relative to the top of the target range.
One good reversal would be nice.
Toward the top of the range. These actions help keep the effective federal funds rate well within the target range.
Peel off a little bit here.
One more such change. The target range for the federal funds rate is our main indicator of the stance of policy, and it remains unchanged. Thank you very much. I'll be
That's it.
glad to take your questions.
I'm going to pull these down here.
As the statement noted, core inflation now running below 2%. It's been falling for 3 straight months, and while you've been close, it's only been at 2% or above 1 month since 2012. Mr. Chair, I guess I wonder, is it time to address low inflation through policy? And can you give us some sense of your metric for when it would be time? At what level would it require a policy response from the committee?
So, first, we are strongly committed to our 2% inflation objective and to achieving it on a sustained and symmetric basis. As I mentioned, we think our policy stance is appropriate at the moment, and we don't see a strong case for moving in either direction. I would point out that inflation, including core inflation, actually ran pretty close to 2% for.
It is interesting that as he talks about certain things, that you
can see the response. Yeah.
Though did come in on the soft side in the first quarter, and that was not expected as it relates to core. So we say in our statement of longer-run goals and monetary policy strategy that the committee would be concerned if inflation were running persistently above or below 2%. So persistent carries the sense of something that's not transient, something that will sustain over a period of time. And in this case,
another break lower.
At these readings in the first quarter
if we can get.
We do see good reasons to think that some or all of the unexpected decrease may wind up being transient. And I point to things like portfolio management, service prices, apparel prices, and other things. In addition, the trimmed mean measures of inflation did not go down as much. Indeed, Dallas trim mean is at 2%. But to go back to your question, if we did see a persistent inflation running persistently below, then that is something the committee would be concerned about, and something that we would take into account in setting policy.
Sam.
All right.
You can tell when it's exciting because we forget that we're on YouTube.
I know. I'm like sitting here trading, talking.
Markets about prospects for a rate reduction this year. Do you think
Let's see if we can get a pull up. I want to see where we're at on that 5-minute chart.
Would you need to see to give serious consideration of a rate cut? A discussion, for example, about the 1995 example. Do you actually need to see a looming recession to cut rates, or could an insurance cut be appropriate? Thanks.
This will be an interesting response right here.
We've just come through a 2-day meeting, and we've done a deep dive on economic and financial conditions in the United States and around the world, and thought about our policy. And we do think our policy stance is appropriate right now. We don't see a strong case
That's going to hurt.
for moving in either direction.
So the market is clearly looking for more accommodation. So let's see if that.
We look not only at our baseline, but we also look at alternative simulations, both better and worse, and we ask ourselves what,
And we close out.
what the appropriate policy response
So we're at
would
like
be.
a 60 pip drop in
That's
the
what we
euro
do,
there.
And
Yeah.
I would just say that we're comfortable. The committee is comfortable with our current policy stance.
Here's where we start to close out and take our losses for the session.
Shawn with Reuters. Shifting gears a little bit, I wondered if you could flesh out, I know you're describing it as a small technical adjustment, but on the IOER federal funds spread.
And
Give us
if
a
we can
sense
get
of
one
why
little
it
push
matters
higher, I'm going
whether
to
or
try
not
and
this
put
reaches the upper limit a little bit.
a few more in right in
Is there any
here.
feed through to broader credit conditions and financial conditions that you worry about, or is it simply a matter of the Fed showing that it can control what it says it's controlling? And I do have a follow-up.
A small temporary deviation outside of the range would really wouldn't be important, as your question suggests. But we do think it's important that we be able to, control the federal funds rate and generally keep it within the range. That's just good monetary policy, good monetary control. So, we think it's important, and we have the tools to do that. So we've used them again today. And again, this is just a technical fix. It really has no implications for policy.
But as a follow-up on this, it is demonstrating that you control the market you want to control. And I guess the question is, at what point would these steady declines in the IOER and the steady widening of this spread, if it continues, essentially become the policy choice?
Yeah, so generally speaking, the federal funds rate, we control only directly the federal funds rate in terms of the market rate, and the transmission of the federal funds rate into other short-term rates, money market rates, has been very good over a long period of time. And that's important because it's really broader financial
Just
conditions
need
that
one
matter,
little
not so much
pop,
the
one little
federal funds rate.
retracement,
So
and
I
we're
think
not getting anything
the
right
Fed
here.
controlling the federal
It
funds
doesn't
rate is
wanna
actually
go
important
back
from
up.
that standpoint. And I don't see us not controlling it. So I think we'll continue to control it, and then we'll continue to transmit it well under broader financial conditions.
Let's see if we get it right here.
When he stops talking, the market will be.
Rally up.
I'm curious about the financial conditions that you see out there. The minutes in the March meeting tell us a few officials worried about financial stability risks. Was there a broader discussion at this meeting? Any consensus on whether such risks are growing as the markets hit new highs and we do see some instability?
Any kind of rally right in here. I need to
Possible that rates are
adjust
too low?
positions, take off,
So we actually
peel
have
off some of the
a financial
losses.
stability briefing and opportunity for comment every other meeting. So we had our quarterly briefing yesterday, as a matter of fact, and had that discussion as well. And I think there haven't been a lot of changes since the last meeting, but I'll just go through the way we think about it. First, we've developed and published our framework for assessing financial stability vulnerabilities, put it out for comment, and
See if we can get another
feedback that we
bullish
get
bar
from the
right
public.
here.
And that enables us to focus our assessments, regularly on the same thing so that we can be held accountable and be transparent. so there are four aspects of it that I'll go through quickly, but I'd say that the headline really is that while there's some concerns around non-financial corporate debt, really the finding is that overall vulnerabilities in the financial stability vulnerabilities are moderate on balance. And in addition, I would say that the financial system is quite resilient to shocks of various kinds with high capital and liquidity. But the four things we look at are first asset prices. And as for asset prices, some asset prices are somewhat elevated, but I would say not extremely.
Okay,
so.
now I'm going to start building
Leverage
some
in the
short
financial sector,
positions
I
in
mentioned,
here.
Households are actually in good shape from a leverage standpoint. Default rates are low, borrowing is relatively low. Non-financial corporates is an area that we've spotlighted and focused on for attention, and there are concerns about that, not so much from a financial stability standpoint, but from the standpoint that having a highly leveraged corporate sector could be an amplifier for a downturn. And then the last two things are really about the leverage in the financial system and funding risk, and those are both very, very low by historic standards in the United States. So,
And let's see if this holds down here at these support levels.
Follow up on that. I'm just curious as to whether the level of asset prices is a reason why you might not be interested in cutting rates.
So we do say that risks to the financial system, or we say in our longer run statement of goals and monetary policy strategy, that risks to the financial system that could prevent us from achieving our goals are something that we do take into consideration.
Let's see if we get a bounce right here. A little bounce would be nice.
Addressing those concerns are better, capital liquidity, good supervision, good stress testing, and things like that.
And we'll pull
Those
these
are better
targets
for sure
down.
tools to deal with these kinds of issues than monetary policy.
Nick Tamaros of the Wall Street Journal. Chair Powell, with the benefit of hindsight, did last year's rate increases make it harder for the Fed to credibly affirm its 2% symmetric inflation target is not in fact a ceiling? And if so, would it be appropriate to lower rates if core inflation remained persistently closer to 1.5% instead of 2%? And if not, do you worry about any unwelcome tightening in real rates given the recent softness in core inflation?
So
That was a good
to
question.
Your first question, if you go back and think about the middle of last year, inflation was at 2%, and appeared to be staying there. And the economy was quite strong, was growing strong. The fiscal changes were hitting the economy in a very positive way, and so I think the expectation was that inflation would remain up around 2%. The weak first quarter performance was not expected. Of core was not expected, and I don't think is related to anything we did in terms
All
of
right.
raising rates.
So let's
It
see if we can
appears to
get
be
those
more-
up.
We don't know this, but you never know until only with hindsight, with perfect hindsight. But some of it does appear to be transient or idiosyncratic. Now, the second part of your question, sorry.
Well, if
Idiosyncratic. I like that word.
if it was an issue, would it be appropriate to
Now
lower
some shorts
rates
on
if core
right
inflation
here.
fell closer to 1.5%? And if not, are you worried that there's unwanted tightening from real rates being where they are?
Yeah, so as I said earlier, we do address this in our sort of constitutional document. If inflation were to run persistently below 2% or persistently above 2%, that would be a concern for the committee, and the committee would take that into account in making policy. I do think it's important that inflation run close to and sustainably for a sustained period of time and symmetrically around 2%, because if it doesn't, you run the risk that inflation expectations can, if it has been the case, most of the misses are on the downside. Inflation
All right.
expectations over time could be pulled down. That could
Now let's see if
pressure
it
on
breaks this
inflation, make it
support
harder
level.
for us to react to downturns and harder for us to support the economy in difficult times.
Gina Smiley with New York Times. So as you just mentioned, last year when you guys were kind of getting inflation coming in around 2%, you had this benefit of the tailwind of fiscal stimulus. And you still have that to some extent although the tax cuts have mostly feeded through, we've still got something in the pipeline from the spending cap increases. So I guess, how do you think about inflation as that fiscal benefit wanes toward the end of this year?
Okay, so what I'm doing now is I'm going to fade into the top of this range and see if I can get some another down leg off of that.
Hitting it. So probably the biggest single factor driving it is the rate of underlying inflation, or a closely related idea of where inflation expectations are anchored. The thought being that's where inflation will go in the long run if it's not being pushed by those other factors. So we also think that slack, that the level of slack in the economy does play some small role. It's it's actually still a measurable role. It's nothing like it was in the 1960s when the Phillips curve was quite steep. So that's also something that plays a role. And
there is a nice
we take all
move.
those things into account, and the part of it that we can control is the slack part. And again, we do expect that this reading will be transient, and inflation will move back up. And if it isn't, then if it runs persistently below 2%.
What's he going to say here? What's he going to
sustained
say?
Period, then that's something we take into account in setting policy.
Okay, Donna.
Chairman Powell, Donna Borak with CNN. Pivoting a little bit about wages. Since 2010, women's real earnings have gone up about 3.9% compared to men's, which has risen, about 2.1. Do you think the relative increase in women's wages is a problem for the US economy?
The big question is, are we going to break the lows of this little... Not that her question wasn't important. But are we going to break the lows here?
I mean, it sounds like you picked a particular time frame. Over time, I really wonder whether that's the case.
Let's see.
I think men and women should
It's
make
going to
the same
hold.
work.
It's holding it right now, but I have a feeling it's going to break lower.
Just to push a little bit on this, but if the data shows that women's wages are rising higher, is there a damage to the U.S. economy if males' wages are declining or not growing as fast as women?
Yeah, so I think we're getting in here to commenting on a
Political
nominee of
issue.
the Fed indirectly, and that's something I'd rather avoid. It's really not my role to engage with potential nominees to the Fed, so I'm really not going to go there. I haven't seen this research either, so I don't really know. Thanks.
See if we break it right in here. This is where it could break right here. Good, nice. Got a nice descending highs that are pressing down on that.
How long it lasted, whether you know what happened, whether you're still looking into it, and whether it's something that
not this time.
could happen again.
Sure, so that's right. I want to say it was April 1, but it may have been April 2. In any case, the Fedwire did go down for a few hours in the 3 or 4 hour range. We were able to quickly identify the problem. It was an internal problem, and we were able to correct it and make changes so that problem and other problems like it cannot repeat themselves. So we learned from these instances. They're fairly rare, but we learned from them, and in this case, it was internal and it's been corrected.
Steve Matthews with Bloomberg.
Okay, so that didn't do the breakdown, and instead it rallied back up to the top, so that means that there's going to be a little bit more, right now there's going to be a little bit more pressure on this to break to the upside, so I'm going to hold off on building positions right in here for a minute and see what it does around these highs, because right now it could have a good leg to the upside right in here. So it failed to break lower here. That'll give the buyers a little bit more oomph, a little bit more, of a reason to push that market higher. So let's just see what it does.
All I can see is that we have an economy where the expansion is continuing, growth is,
And
the labor market is
see if it breaks lower.
It's
or
definitely
it
building a
holds.
base there, isn't it?
Yeah, it definitely is.
to be patient, and we do expect it to move up, and we want
Oh, nice. There we go. Nice move lower right there.
to see us on a good path for this year.
You see the parallels with the 1990s when, for example, pointed out in the U.S., the longest expansion before this one.
Hasn't broken it.
1995, rates went up and they came down, and there was that kind of management. Do you see similarities in today's situation?
Similarities in the length. I mean, the situations were quite different. This was before inflation.
And a tail on the low side here, so that's going to again give the buyers a little bit of energy right in here.
But I think in our own
Is that a downer tail?
That's a
downer tail.
No, this is a tail on the downside, but it's pushing it up.
Mr. Chairman, Marty Kutzinger with the AP. You've repeatedly said that the Fed is going to conduct monetary policy without regard to outside political pressure, but it seems like the president is...
There's a good question, huh?
Political pressure. Yesterday he said you should cut rates a full percentage point in starting...
How's he going to answer this one?
What do those comments do in terms of affecting how you pursue policy and how you convey your decisions to the public?
Yeah, so as you know, we are...
He's got to be very careful.
Very careful,
how he
yeah.
answers this.
And that means we don't
They're
think
baiting
about
him.
short-term political considerations, we don't discuss them, and we don't consider them in making our decisions one way or the other. And what we're always solving for in our process, in our work, is to carry out our mission, which is to extend the economic expansion, keep the labor market strong, and get inflation around 2%. So to give you an idea of what our process is like, maybe as a way of putting all that in context. So for the past maybe 10 days, all 17 FOMC members will have made extensive preparations, catching up on the latest data, reading all the memos.
Now back down onto those low end, the low end of that consolidation.
Thousands of business people and market people and people in the nonprofit sector and the educational sector, and just to get a better sense of the economy. We put all that together. We come together for 2 days. The first day begins with an economic briefing, which is sort of economic and financial developments in the United States and around the world. That takes up most of the first day, and we talk about this in great detail. We go away, we think about that, and we come back, and the next day we talk about monetary policy. And in this particular case, we came to a unanimous decision after an extensive discussion that our monetary policy...
New lows here or not?
And
there's a new low.
Policy stance is in a good place, and we're going to be patient as we consider adjustments. So, and we also see, by the way, the evolving risk picture as very consistent with that outlook. So we don't feel like the data is pushing us in either direction. Of course, we'll not hesitate if we do feel that the data justify a move in either direction. But that's our process. That's how we think about things. We don't think.
He's staying away from the whole Trump.
Yeah, he does not want to get into that. Does not want to get into the whole Trump thing, for sure.
From Dow Jones Newswires. Thanks for the question. In the last 23 years, core PCE inflation has run above.
And I want to get into a long right in here, so I think I'm going to start to build a long position.
I'd like to know what you would say to people who worry that it will prove difficult for the Fed.
And I'm going to start to close out those shorts for a small loss here.
Another asset bubble of some sort. Thank you.
Yeah. So, I mean, you're pointing to really the fact that in recent years, inflation has moved down and down, and really many major central banks have struggled to reach their inflation goals from below.
And a second short position here.
We've come closer, I think, than most others. And it's just a question, I think, of demographic and other large and in some cases global forces that are making that are disinflationary to some extent. And it creates significant challenges. One, I would say, is it means that interest rates will be lower, will be closer to the effective lower bound more of the time, because that means lower interest rates, and that's one of the reasons we're having a review of our monetary policy strategies, tools, and communications this year, is to think about that problem. You mentioned the connection to financial stability of lower for longer rates, and that is another challenge.
I'm a little surprised we haven't seen either a reaction back up or a breakthrough.
I know,
there.
it's very interesting.
To the extent they threaten achievement of our goals, but we also view, and I do take the view that macroprudential and supervisory tools, regulatory tools, things like the stress tests that we can do right through the cycle, those are really the best defense against financial instability, so that the financial system is highly resilient to the kinds of financial shocks that can happen.
All right, so closed out of those shorts. Now I'm into the longs. They're still on there, and let's see if now it's going to break. Let's see if it now breaks. I'm going to build some more longs in here.
The ISM manufacturing index
Running.
And it's going to run. So there's a break for sure right there.
Cloud on your outlook for strong growth for the rest of the year. I mean, how much
Let's see
weight does
if
it
we get a
hold for you?
pop up.
And is it a sign that monetary policy might be too tight?
This is the ISM reading, I guess, from this morning on manufacturing. Yeah, I mean, we see that reading as it's still a positive reading and consistent with what we expect from the manufacturing sector, which is moderate or perhaps modest growth.
Let's see if this this candle forms a lower low, then we might get another push lower. So, but I think I'm going to still trade the long side right in here. This is my contrarian in me.
From Fox Business. Thank you, Mr. Chairman, for doing this. You mentioned, talk about domestic
I'm going to put a
growth
little
with
bit
the economy.
bigger
You mentioned
target on that.
Progress in the talks with China trade, progress in talks with Japanese trade, the USMCA is moving or going to
I'm more interested in seeing when he stops talking, what happens.
I know, that's a long press conference.
And could these trade deals turn into tailwinds for the economy?
Our outlook and my outlook is a positive one, is a healthy one for the U.S. economy, for growth for the rest of this year. And I would say that the basis for that really is consumer spending and business investment. So if you look at consumer spending, you saw stronger retail sales, stronger motor vehicle sales in March. And as I mentioned, the conditions, the broader economic fundamentals are strong in support of consumer spending. That's more accommodative financial conditions, high confidence readings, high levels of employment, wages going up. All those things are going to support consumer spending. So that's a significant part.
There's a good pop right
the
there.
outlook this year. And business investment should also be positive.
If it comes back down into this area down in here again, I'm going to build another long position.
I think one thing would be that the resolution of the uncertainty around these trade negotiations would, I would guess, be a positive for business sentiment. We have been hearing from our business contacts really a lot since the beginning of the trade negotiations that uncertainty is a concern if you import metals or whatever for your product or export your product, then it's been a challenge for you. So that would be a positive. And of course,
let's see if we get another low, another push lower, and then I'll build a long. I don't want to build a short in here.
I don't think they wouldn't be the kind of thing where you'd immediately feel big effects right away, but they could be quite important over a longer period. So that, I think, that's would be my expectation. I don't know, though. I haven't seen, none of us.
So keeping it small right in through here. Ideally, I want to start to build my position right in this area right in here.
LA Times. Getting back to inflation, can you talk more about the transitory factors holding down inflation, how significant they are, and why you
That looks like Keone upstairs, doesn't it?
It does.
Sure, well,
Are you sure he's up there?
Yeah, he's upstairs.
I don't mean to diminish concerns about too low inflation, but I think there's good reason to think that these low readings are particularly influenced by some transitory factors. One that I would mention is portfolio management services, which would tend to go down when asset prices go down with a lag. And
so it's holding in the upper ranges, but there's more tail activity on the top side right now. So here again, I think I may switch sides and move back into a short, thinking that it'll test these lows once again.
There are many little things. So we don't know until we see, but
so build into the shorts right here, and then I'll peel off these longs.
There are models that look at inflation in different ways, like not models,
shorts all triggered off.
The Dallas True Mean, as I mentioned. So True Mean
and here we get into the longs.
The big movements on the upside and the downside and looks at just the mean movements in inflation of various product categories and service categories.
Build some
And it didn't
longs
go down
right
at
in
all. It's
here.
at 2%, or it's at, I don't know whether it went down, it was above that, but it's at 2% now. So there's reason to think that these will be transient. We, of course, will be watching very carefully to see if that's the case.
Transient.
I would point
Transient.
to the case of
How is that transient?
services. Many of
I
you
think
will
it's
remember
transient.
March of
Transient.
2017,
Transient.
there was a very
Well,
low rate
when you're the chairman of the Fed, you can say whatever you want.
You can say it however you want.
and,
Transient.
it was
Transient.
kind of a
Transient.
price war, and it dragged down core inflation for a full year.
Well, I'm just trading now to kind of get back to break even to where I was before the before the big meltdown. So I survived. I need to get a T-shirt that says I survived the 80-point plunge in the euro.
We're going to be watching. Really, I'd like to say we're going to be watching inflation carefully to see that these.
I lost a little bit, but if I keep at it,
I'll say,
I will more than likely make that back up relatively soon. Okay, right here we gotta. It could have another leg lower right here.
Chair Powell, Nancy Marshall-Genzer with Marketplace. You're saying if inflation does stay low and these
So a new lower low.
not transient,
Transient.
you said a couple times you take that into account.
Transient.
How
Transient.
specifically will you take that into account?
Yeah, it's hard to say because there's so many other variables. You know, I mean, we ultimately there are many variables to be taken into account.
He's not sure what the
but
question
that's
is.
part of our mandate.
Because she didn't say the right word.
We define that as 2%, so we'd be concerned and we'd take it into account.
So, cutting interest rates would be.
I can't really be any more specific than what I've said.
His answers are getting shorter. The
Yeah,
longer
he's
he
like,
gets-
I'm done with this. No more.
Market news. If the Fed funds rate keeps rising, do you see room for another IOER adjustment? And then, can you speak to any other strategies?
Build
or
into
tools
some
that might
longs
be
again.
useful for keeping a ceiling on short-term interest rates? There have been other ideas floated, like the standing repo facility and targeting a different benchmark rate.
Okay, right here. We got to hold this level one more time.
And as needed, we will use our tools to keep the federal funds rate, somewhere in the target range. We'll do that. Don't expect to need to do it again, but we don't know. I mean, we're with the balance sheet is now the size of it is going to be driven by demand for liabilities, principally reserves, as I mentioned. And we're right at that point where
We're right on an edge right here. I don't know if it's going to drop or move higher, so I got to be careful.
If you'd stop talking and go back up now.
Do it, and that's why we're moving so very gradually. It's why we tapered.
I could mute him.
Mute him.
Roll-off to only $15 billion in treasuries.
He's really going a long time, actually. That's a long press conference.
We're cutting the roll-off rate for treasuries in half, just because we.
There's that lower rate, or that low, another drop lower. Let's see if we.
In terms of other tools, we're actually, I'm sure at an upcoming meeting, we will be looking at the idea of a repo facility. I don't have any presupposition that it's something we would do, but we'll be taking a look at it as a possible addition to our toolbox. Again, I wouldn't say it would just be in a way.
Okay, here's the corner. See if we get the reversal right here.
Carefully about it.
There's a reversal and a push higher.
Go away and think about it for a little while, and then probably come back and make a decision. But that's something we'll do at an upcoming meeting, I would imagine.
And any more? We got any more out of you? Nope, not yet.
American banker. On the regulatory side, the Fed and other bank regulators are said to be weighing all options for retooling a proposal to revise the Volcker rule. Can you give any indication how close the agencies are to coming to a solution and what that solution might look like?
And
whether
we'll
it
see.
would be
Come on.
starting from scratch entirely or making changes to the original proposal?
We put out a proposal on Volcker some time ago, and we got a lot of comments, and we're reviewing them carefully. I really don't have a lot for you. I know they're making good progress. I don't really have a date, though. And in terms of what all it's going to be, it's not something I can say with any certainty yet.
Okay, we'll go to Brian.
So we got that turn in the market on the last pivot, and then it pulled all the way back down. Let's see if we get some more bullish behavior right here.
wondering if you think that continued growth in economic activity might show some sort of underlying fundamental that could flag another overheating. For example, the median projection in the March meeting for GDP growth for 2019 was 2.1, so I'm just kind of curious about what you see going forward if we continue to see strong GDP numbers.
Well, we don't see any evidence at all of overheating, for one thing. We see inflation below 2% now, as I mentioned, pretty close to 2% for most
See
of
if
last
they
year.
key in on that.
So
Markets
really
key
no
in on that.
signs of overheating. If you look at the labor market, for a long time now, there have been anecdotal reports of labor shortages and difficulty in finding skilled labor and that kind of thing. Nonetheless, you have very strong job creation, and you have wages moving up at a rate that is appropriate given inflation and given productivity, but not at all signaling any overheating at all. It's not higher than that rate that would incorporate both inflation and productivity. So really not seeing signs of overheating at the moment.
So now we've moved into a new stage of price development. So we had the big push lower, followed by some sideways consolidation, and now we're just kind of grinding into a grinding lower low, lower low, lower low, lower low, but very slow. So as long as we can keep a little bit of this volatility coming in, we should get an up leg, or we could get an up leg at any point right in here. Just some sort of a quick retracement, but we'll see if that works or not.
The biggest part of the gains have come for people at the lowest end of compensation and education, which is
I think this is the last question. So
He said that? Thank you.
So productivity.
Thank you, Mr. Powell. Put an end to it.
Very difficult to predict. No one has been able to predict it successfully, so I won't really try, but I will say this. Productivity was very, very low in the wake of the crisis for 6 or 7 years.
I'm going to look real quick. We may be down on the low of that.
Which is much higher. I don't know if that level can be sustained.
We broke that pretty heartily.
We really, it's driven to some extent by technological developments and really the diffusion of technology through the economy, and it's very hard to predict. So I think it's positive. In fact, I'll mention, if we're talking about the supply side, labor force participation, really there has been a significant positive supply side development over the last year and a half between...
Okay, no reversal point yet. We're just at the trigger point on the reversal, so if it pulls back down, we'll add another layer. We've taken some profits off the table.
Less tight economy and less, maybe part of the explanation for lower inflation.
And let's see if we can get a rally. Okay, he's done. Now, does the market breathe a sigh of relief?
Yeah, or does it start to?
Or does it start to keep really move lower? We'll see here. Here is so close to the turn right here, so close to a turn. If we can get a little bit of bullish, there we go. A little bullish action. He just needed to stop talking, huh? That was all.
Everybody's hanging on every word.
All right. We're back to where we started. What do you think,
good.
traders? I guess if you can survive a 80 pip move and get back to where you started, I guess that's okay. I was still a little down on the return, the ROI, basically just because of the volume of trading that I've been doing and the spreads, but let's see, now I want to get into some shorts again. Let's see if it just keeps running or not. I'll keep it small. I love to trade. That's my problem.
We could be here all day trading.
What?
That'd be weird, wouldn't it?
Yeah, probably.
We'd have to get chairs, though.
I know, the standing thing is oh. Any questions, comments, observations? I can kind of talk through what happened. So as this market pulled down, I started looking for some volatility bounce. That never happened, and the magnitude, the speed at which that dropped with that market dropped, just kind of kept pushing me into some bigger and bigger losses, and I kept looking for some sort of bounce. Absolutely zero bounces. So I went into what I call fix-it mode, where I'm starting to peel off losses, pretty heavy losses throughout that process, and trying to stabilize the account. And once it got into this zone right over in here, once it got into this little zone in here, I was able to use the just the normal consolidation range. The ranges in between the consolidation was enough to give me enough to recoup some of the losses through that process. And then this last little leg, of course, has been really good to get me back up to roughly to where I was prior to the big meltdown right in here. So that's kind of the big picture. And if I keep trading, you know, I could hopefully make a little bit of money in the process. I think this demonstrates, trading today demonstrates, you know, why we generally try to avoid news events, because you're never, you know, it was by all intents it was moving higher, right? What everyone was looking for is, what is Powell gonna say in his comments after the fact, and that was, you know, that's where the market really started moving, and got a little caught upside down on that.
Yeah, I think this is a good illustration of why, if you're going to trade news, make sure that you use small position sizes and that you're comfortable with this type of potential movement here.
Yeah.
And I think the key for, you know, what you do is you don't just hold on to your positions and hope that they come back to you. You know, you're constantly managing them and tweaking them and getting out of the losses and adding positions and switching directions, which you have to do if you're going to be able to manage your way out of trades like that.
Yeah, it's it's a very proactive approach to how I manage a position, right? I think that's if I sat there and waited and watched, you know, you could get it upside down pretty quickly. This is just one style, you know, this is one technique of trading. Obviously, if you're going to be doing the wait and watch, then you want a much smaller position size and a much bigger, you know, stop loss.
Yeah.
Because you've got that volatility that you've got to manage through the process. So there are advantages and disadvantages to every strategy and every technique that you trade out there. Just super important that you understand where the strengths of your strategy lie and where the weaknesses lie, and try and manage through those, the good days and the bad days of that. So, any questions out there? Anything from our traders out there?
Just a lot of comments and like saying thank you. It was an awesome opportunity to watch how you do it. You could get another truck.
Get another truck. So I got the Ford. Now I got to go get the Chevy.
One of each.
One of each.
Yeah, here's Shawn's the only guy I've ever watched make money on the market that's going against him.
Well, that was not easy. I was sweating a little bit there. When I go silent, you know, things are like, that was not. There was a few minutes of quietness.
Intense focus.
Quiet place. Well, like I said, we made the pips back. We're down a little bit on the daily return, but all in all, you know, that there's an FOMC trading session. A lot of fun, you know, to trade it. I think staying the course is a big takeaway from our session today. You know, what is your strategy, and what are the weaknesses of the strategy, and making sure that you stay the course with your strategy. My strategy says, you know, after a certain after a certain bid, I've got to get into fix-it mode,
Yep.
which I did, and I took some pretty hefty losses on some of those positions. You know, if we're talking 20, 28, 30 pip losses on some of those positions. Another challenge that I have in this session was the change in the magnitude of volatility. So we were hitting 2 to 3 pips relatively. You know, it was one new price bar. I had moved 3-4 pips, which is good. That's very normal for my style and what I do well in. But then it went exponential,
Huge,
right?
yeah.
Just that volatility spiked significantly. And so when you do take those 20 plus pip losses, it takes an awful lot of 2 pip gains to recoup those. And so you'll notice that I did start moving into bigger positions. You know, once I got in tune with the market, I was getting into bigger positions and booking a lot of those little 2 pips to compensate for those bigger losses. That's part of the wobble technique, you know, that I've kind of used in my trading. But any last comments, thoughts,
No,
Todd?
I think you kind of wrapped it up there really well.
Well,
It's
always
been fun though.
Always fun trading with you. I enjoy it. Fun trading with you, traders out there, and I know that you're getting a latent signal, and so you're probably, this is more for, you know, just watching than following along in your trading. But always, every session that you do, just remember, every session that you are at, there's a learning opportunity, something to take away, and make sure that you do that. Make sure that you learn from each session. Tangent. Each session. All right, traders, we'll see you.
Bye.
Oh, like it. Yeah. Put a thumbs up if you like the video. YouTube likes that. So we want YouTube to like us. So thank you, traders. We'll see you.